Hello all, welcome to alexjwilson.com, and it is 2018. So welcome back to my investment blog on how I turned an initial deposit of $39,300 into over $1 million in real estate equity by investing in Toronto condos. So we're going to start off with the first video of the year, our predictions of what's going to happen in 2018. Now, there's a lot of uncertainty out there, a lot of people concerned with the changes to the mortgage rules and the new stress test. Well, guess what? This will help you make more money as a condo investor. The stress test actually helps improve your property values, and we're going to get into that, why that is, in our predictions below. So let's start off. Number one. Well, guess what? Sales, the actual sales numbers in the GTA are going to go up. Last year, we started out the market really hot, but things taper back after the introduction to the changes by the provincial government, the Fair Housing Act. So that did take the steam out of the market. And we saw a real take-back in the final 6 months of the year. So we only finished off with 92,000 sales overall in TREB for 2017. But we're going to see a rebound back, and we predict over 100,000 sales, unit sales, for properties across the GTA in 2018. And why we think that, we look back in 2016, we saw 113,000 sales. 2015, 101,000 sales. Even 2004, 93,000 sales. These were all greater than the 92,000 sales that we saw in 2017. What this means, there's a lot of pent-up demand, a lot of buyers that are waiting on the sidelines. And I see this with my pipeline that's continuing to grow with buyers. So we have a lot of pent-up demand of buyers, and we know there's not less people moving to Toronto, there's always more people moving to Toronto. So we know that there's a pent-up demand, and that's really going to release itself into the market, even with the mortgage changes. And speaking of that, number two, the sweet spot in the GTA, the price point wise, it's going to be between $500,000 to $1 million. This is your spot where we're going to see the most price appreciation. There is a reason for this. The reason for this is with the mortgage changes, that millennial couple, before when they stretched up to try to get that first freehold property, well, they lost 18% of their buying power. So now they're going to need to take a step back. So what does that mean? They're going to be at a lower price bracket. They still need to live somewhere, but they're going to be at a lower price bracket. And that's probably going to fall into the $500,000 to $1 million mark. They're not going to be able to push up to that $1.2 to maybe $1.6 million home. And that's where we expect to see some weakness, especially in the 905. That $500,000 to $1 million mark, they're going to have to live in condos, and they're going to have to live in condos longer. And guess what? That means price appreciation on your property. So again, $500,000 to $1 million, because the millennials have lost some buying power. That young couple has lost some buying power. Won't be able to make that jump up to that freehold property, which again, remember, has a fixed supply. So it doesn't mean there's going to be a big crash in the prices of the freehold market in Toronto. It just means that we're probably going to be looking a little flatter, and we're going to see an increase in the demand, which will ultimately lead to an increase in the prices of condos. And you may be saying, Alex, but they continue to build more condos. Well, this brings up my next point, a great point. Number three, when we look at pre-construction, these are the buildings going up. A lot of the numbers you see are based on sales. Record number of sales this year, record number of sales this year. Well, sales mean absolutely nothing to the current resale market that you participate in. That just means a piece of paper was signed, and a builder and a buyer agreed to purchase a unit at a set price at some point in the future. But we don't know when that future unit will be ready. We have some estimates, but we don't know when that unit will be ready for someone to move into. So the best number to look at is a number of completions. Now we know that every year we need roughly about 45,000 new units to hit the market to accommodate growing demand for individuals moving to the Greater Toronto Area. This year we predict this completion number to be 42,000. So we're still short 3,000 units just to accommodate the demand of new individuals coming into the Greater Toronto Area. So what does that mean? That means price increases coming to the market because supply is not accommodating the demand for the units. So going back to that $500 to $1 million mark, that sweet spot, that's where we see price growth, especially in the GTA and especially in the 416 in the Toronto area along the transit lines, because we know how difficult it is to get around the city. Next thing, leases. So we talked about on the top end pushing down. So we have buyers being pushed down, again, back into that sweet spot of the $500,000 to $1 million mark. Now, we know there are people that are going to be ultimately pushed out of the market. So they're going to be pushed out of the market because of affordability. They're just not going to be able to they can't afford. There will be those individuals in the market. Well, they still need somewhere to live, so that means they're going to be leasing the properties. Now, we all know that rent control started in 2017. And our prediction is for 2018, we're actually going to see a decrease in the number of lease listings that hit the market. So much so, we're predicting a decrease of 15% decrease in the leases done on the Toronto Real Estate Board. So we know there's more people that are moving to Toronto. We know that some people that were able to buy a property before are no longer able to buy a property before, so they're exiting markets. That puts more pressure on the leasing system, so that's more people. So we got two hands up here, two increases in demand, people moving to Toronto, and now people that can't afford to buy properties that are going to be leasing, and we're expecting leases to go down. Why is that, Alex? Well, because with the rent control system, I've restricted not re-entry, but let's call them resale rentals, because people aren't leaving their rentals. And why aren't they leaving? Well, if I had a market-controlled system, every year, which we had previously, my landlord could increase the rent to a market rate. And if I were a tenant I didn't like that, I could go to another property that I may like better. Now, I have I'm fixed. I have a set rent. It's not going anywhere. But rents have gone up. So even if I didn't really like my property, that same unit is more money. So I have no motivation to leave my property. So before I may have moved, now I'm not going to move because there's a significant jump in the rental amounts. So now we have a two-tiered system. We have new units come in the market, which are going to be at the higher rent. Well, I'm going out of the screen. At a higher rent. And then we have our units that are at their fixed rate. They're going to stay there. So none of these units are coming in the market because people aren't leaving them unless they have to leave. What's their motivation to leave? They're paying less money. So new units come in the market are going to be at a higher price point because there is now a restricted supply and then increased demand, just your natural increase in regards to more people moving to Toronto. And now people that are forced out of the real estate market are forced to rent, so that puts more demand on the market. Hey, and guess what? We're in record job growth. That means our economy is doing fantastic. So that means more people, more jobs moving to the city. And there's not enough units available for them to live. So what we're predicting a 15% decrease in the amount of lease listings just because we're going to see a restricted supply come in the market because we won't have those units re-entering the market because people are staying in them, and a 10% increase in lease prices. So I talked about before on, as I said, we had pressure from individuals coming from the top end that are going to be entering the market on prices wise, because now they can't get in the freehold property, so they're going to be in condos. They're going to be in condos longer. And now in the bottom end, lease prices are going up, which makes it attractive for investors to continue to enter into the market and buy properties. So for investors, it's great. And there's people from the top end coming down into the market. Now we're in that sweet spot, that $500,000 to $1 million mark. And that's where we're going to see the price growth and the opportunity. So this brings us to our next point. Where do we see prices going in 2018? Well, depending where you are, not everywhere in the GTA are we going to see price increases. We're going to see price decreases in some areas in the GTA. But the GTA, and I hate when people talk about the GTA and talk about it as the average price in the GTA is blah, blah, blah. Because we are not one market. We're not a homogeneous market. We're sub-markets within the whole GTA. And we're going to get into that in a second. We're sub-markets within the whole GTA. So we're in the sweet spot, that $500,000 to $1 million mark in the condo market in downtown Toronto. And that's where you want to be, because that's where we see the greatest opportunity and the highest price growth. So I ran some numbers. And say you listened to me last year. It's last year, it's 2017. I'm talking to you on this video. And you said, Alex, I am going to buy a condo from you today. Well, how much money would you have made? Well, in the start of January 2017, so January 2017, the average price for a condo in C1 and C8. So this is going to our submarkets. Submarket C1, C8 is our downtown condo. That's condos south of Bloor, north of the lake, west of the DVP, and east of Dufferin. That's our C1, C8. So that's our marker whenever we're talking about numbers, our downtown core, okay? So the average price of a condo at that time was $536,236. That was the average price. December 2017, so our 1 year mark, our average price was $626,404. You know that what gain that is? That's almost a 17% gain, 81% gain. 16.81% gain, rounded up to 17% increase in the price of your property. And remember, we deal with leverage returns. So this way. Let's look at our math right here. So our 20% deposit, our closing costs, which include land transfer tax and legal fees, our total investment would have been $123,146. So our gain on that is a 60% gain year over year. A 60%, it's not a 60% gain, a 60% increase year over year. That's a fantastic investment. So if you would have listened to me, you would have made 60 points on your money. But you didn't listen to me. Or maybe you did listen to me. I don't know if you listened to me or not. But you should listen to me. So, if you listen to me this year, and we're predicting a 5 to 10% growth still in the price of the condo market in downtown Toronto, let's look at what our numbers are. Oh, again, over here. So there's our numbers coming down here. So if we're looking at just 5% growth, the lowest end of prediction, our leverage return will still be 8.16% on your money. And at 10%, we're looking at nearly a 30% gain on your leverage return. This is fantastic. And remember, what's very important is that we have a tenant in your property paying down your mortgage. So these numbers don't even equate to any equity pay down that you get. Reduction in your principal amount of your debt amount for your mortgage. Not even factoring in on that. So it's still great news and still great time to buy a condo because we're predicting increases in prices, increases in rents, and we still have a strong job market. And speaking of increases in rents, even if interest rates go up, we have the rental increases which are offsetting any increase in costs of operating your property. So you are covered there. Overall, it's a rosy picture for the downtown Toronto condo investment market for 2018. So if you're looking to invest, send me an email, should be down here, contact@alexjwilson.com, or call me at 416-996 5181. You can text that number as well. And let's set up a meeting and let's talk more on what your goals are for your real estate portfolio, so how you can retire early and build generational wealth for your family. Looking forward to a great 2018 and speaking with you soon. Talk to you later. Bye-bye.